Thank you everyone for coming. It's 2:15 now. Today we are just gathering here today to speak about securing funding for Southeast Asia startups. So there will be no moderator today, but I think I will kick off the topic just by introducing some of the speakers today. We have Mr. Roslan from DLM, who is a friend of mine actually. We joined a pre-accelerator program together at the My Startup back then, 3 to 4 months ago, when the call just ended. And then I have myself, I'm Jin, founder of ABC Junior, a parenting platform. And then we also have Taken, which is work in multiple startups before, used to do admissions and enrollments for school, and then now he's a sales engineer at Neurogene Group. So correct me if I'm wrong. So those are just some brief information about the speakers here. So let me just kickstart the topic, right? So when we are talking about securing funding for Southeast Asia startups, I think a lot of startups when they kickstarted their idea, right from day one itself, I think a lot of founders have the mindset, before I do anything, why not I secure funding first? And that to me might not be the right mindset. Just in my opinion, you guys can jump in anytime to share some opinion, because I believe that when you are securing funding from different parties, right, what you are also asking is people to open their checkbook or open their bank account and put in some of their hard-earned money and trust within you. So I think if you are securing funding from your own friends or family members, of course it's easy. But when you're talking to a stranger, it requires I would say a certain period of time of you fostering that relationship. It's sort of like a marriage, I would say. A lot of investors and a lot of venture capitals, they will say, securing funding is like a marriage. You need some time to get to know each other, because everyone will have different goals. And every investor, they invest in you for different reasons, right? Some investors, they are purely in the game for to multiply their money. So they are looking to at least 4 to 5 times their money that they invested in you. Some investors are just purely there to invest their money to do more good for the community, right? I think Inche Roslan can share more about that, because he runs DLM, which is a charity sort of a startup, right? So correct me if I'm wrong. You can jump in anytime.
Yes, right. Yeah.
Yeah. I believe it's a blockchain technology for charity donations and stuff like that. So when it comes to that nature of startups, the investors that you sort of attract are very different, I would say, from other startups nature, like software as a service or etc.
Right. Thanks, Jinchi. I think actually we should ask Ken first.
Yeah. I mean, anytime you guys can.
Okay. I'll jump in quickly. Okay.
Yeah,
as a startup, everybody has got their own company vision, directions, and so forth. Ultimately, funding, it's a very integral part of any businesses, right? Whether you are just a startup or you are in the current business operation and so forth, funding is always a major topic in everybody's conversation now, be it in whether doesn't matter where's your phase of your business. Can be early, mature stage, and so forth. Well, I guess in the space of a startup, the funding is actually important. A lot of thought process must be put inside is number one. I guess in order to get your funding much more easier, you have to resonate a couple of things. There is actually 2 parts of it. I look at it in the more holistic diagnosis. One part is, of course, your business, business and whether does it make sense or not, and so forth, whether are you solving any problems and so forth. I think those are quantifiable you can challenge the problem statement, you can get data and so forth. The second part is a bit more different in the sense that if somebody's going to fund you or open up a checkbook, they need to know you. They need to know who is the founder. Some of this you may not be able to get information so easily. Yeah, right. For example, let's say I want to invest in Roslan or Jin's company. I can go to the SSM and find a lot of details. I can go and challenge your problem statement, your validity, your data. But how do I know Jinchi? How do I know Roslan? The part of it, they are, to me as an investor, the top priority, the top most important consideration that I must have is integrity. I think that is the number one now, right? The other rest just fall into places already. Because if I'm going to give my money to somebody in that company, to the founder, that person must have the integrity to use those funds that I'm investing, to make things happen. At the same time, that person must be responsible. He and his team, or the person and his team must be responsible to use the funding efficiently to meet the conditions that they promise and so forth. I think that is the rule number one. That is whether it's old-fashioned or not. I think generations of people come to investment, they need to know, hey, are you guys going to return my money at the end of the day? Are you going to deliver or not? All right. So I think for that itself, a lot of things has to happen and has to reflect on the founders first. Can I trust you guys? In a sense that if I can trust you guys, okay, the process gets easier. The business comes in already. So if I can't trust that guy, that guy, I don't think there's actually any more conversation can go beyond it. Yeah, you can have coffee, you can tea, and all this kind of market, but it just doesn't go beyond it. And to me, I think that is important, right? That's my take, guys. Yeah.
Thank you. That's interesting, Ken, when you say that integrity. I think it's very, very true in a way, because they need to know who you are. I totally agree with that. From my little experience I have, another thing that they're looking for, actually, I believe, is the technology itself. The reason being, if they look at our technology and our technology is just like normal technology and it's not very advanced, I think the investor kind of worried about the future. Can this technology make them to be, can monopolize for maybe 1 year or 2 years or 3 years in its existence of running the business? So I would say, for example, in Malaysia, the venture capitalists would normally see whether this technology can actually make a small niche first, and then this technology can be, developed into a scalability factor for their company. So I tend to believe that, of course, integrity is the highest level. And I tend to see that whenever I try to pitch a little bit of here and there pitching, they always try to figure out what is the technology behind this guy's company and whether or not this technology can help investors to scale even further. So I tend to think also having great technology is actually an asset for the startups. So that's my opinion. Okay. What about Jinji? What do you think, Jinji?
Okay, I think I can share a bit and echo a bit what Ken mentioned earlier. I think because personally I raised twice for 2 different ventures before. So I think based on my own experience, I think while what Mr. Roslan said, the technology and your business nature must make sense to the investor to stand out. I think most of the time, the first when you are a startup founder and the first investment that you get, right, normally the first money that people put in is largely, the decision is largely made based on the integrity of a certain person and also the credibility of a certain person. I think what Ken mentioned just now is very true.
Yes.
How you use the fund and what are you going to use it for, and the mindset of how you are going to handle the fund, I think it matters a lot. Like, for example, we often hear about stories where back then I'm not too sure about now. Back then it's easier to raise money. You can just raise with a pitch deck and nothing solid. You don't even have a minimum viable product. But back then people's mindset is I raise the money, I use part of it to run the stuff. And if it doesn't work, then it doesn't work. I'll just close the company down. And and then I'll cite some other reasons for things not working out, like for example, market conditions and stuff like that. But in truth, they are spending the money in the first place in a lot of wrong places. They spend in luxury offices that they don't even need, or some tools that they won't even use in the beginning. And when you do that, right, you're actually using a lot of your investors' money as well as the trust in the wrong places. So I think even as a founder or even as an investor, when you want to make a decision like whether to give money or to accept money, you have to be really clear to yourself, like why are you taking the money and what are you using it for? Can you actually repay the trust? I think trust is a really heavy thing. I'm not sure a lot of people can handle this term, because a lot of people feel like, okay, it's a small amount of money, maybe the fella put in like 10,000, not much for 10,000. Like someone's salary might even 1 month's salary might even be more than that. But it's not about the amount, it's about the trust. Like if you fail and you did your best, that's a different topic. But if you fail without doing your best and you fail because you did not utilize that money in the right way, then it's something that you have to live with until you die. So I think that is just my take on it. And because today's topic is more on Southeast Asia startups, right? I can say a lot of Southeast Asia startups founder that I actually met either in Malaysia or some other place. I think when they say I want to start a startup, and immediately they think about funding already. And when you think about that, right, that is actually a very scary mindset. Why I say that is because when you are not able to commit yourself, either in terms of time or in terms of financially speaking, whether put in your own money or put in your own time, and then you expect some other investors to just put in their money instantly for you to take that risk and share a larger chunk of that risk rather than you as the founder, it doesn't make sense. Like for example, you want to start a startup. A lot of youngsters in Malaysia actually have this mindset. I want to start a startup. I'm not going to use my own money. I'm not going to do this full time also. I'm going to find some investor, give me a huge chunk of money, solely because I think I have a really great idea. And they will buy into it, and then I'll get some wonderful partners or wonderful co-founders to run it for me. And that itself is not the right mindset to secure funding in the first place. And most founders like this won't even last, and they won't even get into the stage to talk to the investors for any sort of funding. So I think the first criteria of securing any funding in Southeast Asia, not just Southeast Asia, I would say the whole world, the mindset must be right. As in, why are you taking this funding, and why are you seeking for such funding? I think this is very important.
Well said, Jin. Years ago, I was doing trying to raise money from Singapore with some VCs, in one of a corporate exercise that I did. I remember the MD, he spends a lot of time with us. He travels to KL almost every week, all right? Wow. And each time he comes and comes up, he comes to the office, understand our business, look at what we are doing, have dinner with us, talk a bit more. The part whereby he wants to see, they want to see you actually the real deal, right? You're actually in the business, doing it, navigating the business, sharing your visions and your objectivities. At the same time, while understanding the business set, he also spends time with us, understanding us personally. You know, what drives or what takes you, what keeps you awake at 2 a.m. in the morning, you know. So I guess whether it doesn't matter whether, you know, you're going to is $1 or 10,000 or 1 million or 100 million, is the principle is the same. Yeah. The moment I give you $1, a dime, you have to be accountable for it. I think what Jin is trying to say that, you know, the mindset has to be right, that you must have this accountability. Trust is something that you have to earn, you know, you have to demonstrate it. So I think for startups, it's much more better. Is the traction gets easier if you are in it, doing it, hopefully full time. If not, you are doing part time, but actually use funding it through your own pockets, through your own money, yeah, and all this. And while doing that, you're showing traction. I think with that itself, it gives a lot of credibility to the startups. Here you are, you have this wonderful ideation, you know, problem-solving statements and so forth, and you are funding this startup, and you're doing it, and you're building traction. I think the story will be easier to relate, to tell, and it's much more easier to convince anybody that you meet, any stakeholders in the ecosystem, be it in your suppliers, or be it in the potential investors or bankers. Because the part of funding is that one part is the getting capital funding. The other part, you also need working capital. So short-term and long-term capital, yeah. So remember that funding is not per se that I need to get put into invest in $10 million or $1 million, 1 million ringgit or $1 million into as a ordinary share capital share, or even in the preference share scenario, is it? But you also got to look at who other else can fund your business, yeah, giving you a short-term funding cash flow. Like your suppliers may grant you 30 days credit, 60 days credit. They are actually extending funding to you, correct, right? Short-term funding. Because those are the things that you need credit facilities to move, to grow your business, right? And who gives you that? These are using OPM, I call it other people's money to have. But for people to give them your credit, like to give you credit, hey, can Roslan trust on the credit? Does it pay on time or not? You know, you have to go through the whole entire, you know, credit evaluations and so forth. I think that the simple part, if they are able to pay their bills on time, all right, I think that speaks for volume, that how you handle your business. If you can't pay your bills on time, how are you going to convince me as an investor that you are running the ship in a tight ship and you are able to commit your time frame, paying your suppliers, paying your investors, paying and also forth. I think that is something that we have to be mindful. You know, it's start from the basic lah. What Jin is trying to say is right lah. Okay, some founders say, I got this founder, I'm not do for idea. I'm not going to do full time. I'm going to somebody else to run it, and I'm not going to put my money in. I think it doesn't work in this way. It doesn't work in this manner. But I'm not discounting it. Some people may have the fortune, may have the luck. All right, being a super salesperson, they may be able to convince people to put in money without them doing the job. You know, they probably there's a 0.005% chance of that happening. Yeah, I'm not discounting that. Yeah, but by and large, I think those are the things that I think people should consider. You know, what having wonderful pitch deck, solid business proposal, and so forth. I think those discipline must come in. Yeah, that's my thought.
Right. Interesting. I mean, I probably have a question, you know, for both of you. In terms of culture, right? I mean, compared to venture capitalists in the United States, for example, it seems like they are willing to take higher risks. You know, sometimes I've heard about Y Combinator. I just want to mention that. Okay, I've been looking at some of the startups there. They are getting funding even if they don't have product at all, you know, at maybe a really early ideation stage. Is that because of the culture of risk taking is higher there compared to the venture capitalists in Southeast Asia? I mean, Jinchi or Ken, can you share that thought?
I jump in quickly. All right, every VC venture capital has their own mandate, investment objectives, yeah, how they invest.
Right.
Some may look at very, very risky, ventures. Henceforth, out of 10 deals they do, maybe only 1 deal succeed, all right, or maybe 0.5 deals succeed. that will probably
Yes.
cover the whole entire thing.
Right.
Some venture capitalists, some funds, they are mandated. Look, I cannot invest in certain sector. I cannot take certain risks. My risk profile is up to a certain level. So there's so much of money in the world, right, Ruslan?
Yes.
There's
Yes.
trillions of money in
Yes,
the
that's right.
ecosystem. So everybody will say, look, I'm more skilled toward this. I'm more skilled. I'm willing to take higher risks, and I think this is a goer, and henceforth my IRR, internal rate of return, it's higher than the other rest, you know, because the amount of risk I'm taking. But when it comes back to the fund, they say, look, they probably may not have a lot of venture capitalists will come and look at them. Henceforth, they're more willing to say, look, I'm willing to take them in, and in return, I pay higher, at a higher cost, you know, at some point of time. So there's always horses for courses on it. But mind you that funding, there's this thing, new thing, right? You have crypto winter, now you have funding winter, right? So the funding winter has sort of sets in already, that people are more willing only to engage you once you've started to show something in your P&L on it. All right. I guess the days of burning money, yeah, it's probably at the tail end already, or probably long gone already, and so forth, right? So accountability, it's again back to the book that you have to be accountable for investors' money, like shareholders' money at the end of the day. Right. So rule number one for me is, I learned from the old school, is to never lose money. All right. If you what is the rule number two? You forgot rule number one, you look at rule number two. Rule number two, look back at rule number one. Something like that. Yeah. Maybe that shows a bit of the conservatism of myself. But if you look at it, if you want to invest in companies that has got value in it, there are certain things you can look at and so forth. Obviously, this is just one of the many different type of investors profiling that they have. You know, again, all right, it depends on the investor's objective, investor profile on it. Yeah.
Interesting. So Jinchi, what about you, Jinchi? What do you think of that? I mean, from a young man's point of view.
I think what Ken mentioned is very interesting, but when you talk about funding winter, right, you also hear about terms like, I mean, like they always say in Mandarin, the market is not, how to say, there's no lack of funds in the market, but there's a lack of good ventures in the market. That's or good projects. You know, they normally say this in a lot of different, you know, investors always say this to a lot of startups at like different events. And then to a certain extent, I do agree with you. Like, for example, there's one podcast which I heard on BFM, is with I believe is the managing director or the CEO of Endeavour Malaysia. And he was commenting a bit on Grab, on how they have yet to show a path to profitability. Because at the end of the day, right, like what Ken mentioned, you have to show that as a founder or as the founding team, you must have a strategy to turn your venture into a profit. I think that is the baseline of every startups or ventures that you're talking about. Like, because if in the end, you know, back in the days, you can always justify burning money in order to capture huge market share. But at the end, if you can't monetize all this market share, right, then it doesn't really make sense. Because if you can't, like, if you can't put in $1 and at least turn it into $1.10 or 1 cent, then it doesn't make sense. So I think as a founder yourself, and as a founder myself, I think what we can do to, you know, better convince our investor is to at least show some sound strategy as to how you want to grow your startup. I know, like, in a lot of business events or in a lot of startup events, people always talk about 5 years plan, you know, 5 years roadmap. But actually, I'm not really a huge fan of a 5 years roadmap, because you can talk all you want, like how many users you can gain and then how fast you want to scale. But if you can't even execute in terms of short term, right, then it doesn't really make sense to me. So the second time when I raised money for different kind of venture, I was actually, rather than talking about 5 years plan or 3 years plan with the other investor, I only talk about my 4 months plan. How can I guarantee at the end of this year, I can capture a certain amount of users, and that and justify what kind of strategy am I going to use to capture that amount of users. So I think, because why do I want to mention this? Because I think in a lot of startup, in the startup scene, right, a lot of founders, they are really good in not making up stories, but they are really good in convincing others as to their big ideas or what they want to do. But founders that can really talk and show all these big plans while execute and make it happen are two different tiers. You have a lot of people that can talk, but there's only a little there's only a small amount of people who can talk and also do. so I think in order to secure good amount of funding from whatever investor you're talking to, right? I think the key is also to really execute on what you actually say, and it doesn't matter, and it starts from the small things like what Ken mentioned. Like if like, for example, as an investor, if I go to, let's say, your office, or if you phone you out of nowhere, can you actually tell me like what are you actually working on last week, or and what are you actually working on this week, and why are you working on those stuff? So it needs to have some sort of justification as to why you do things a certain way. Because because in startup it can be quite chaotic. You can be working on multiple things at once, and you don't even know like which direction you are heading. But I think the good founders will actually know what direction they want to steer their startup towards, and they will stay away from like shiny object syndromes. If you ask me, that's my opinion.
Well said, Jin. Oh, Jin, I can relate the story. I have a story to tell you guys what Jin has mentioned. Basically, I think Jin is trying to saying that is that, look, show traction and milestones. I think with that itself, people will believe in you, all right? So I relate this story to you guys. This is a real thing, and I was doing a turnaround for this company, an education company. Probably Jin will know that I actually went in to do a turnaround, whereby the sales was actually dropping many years. So the first thing I did was, to do our company, we have to set a lot of targets and so forth. But while doing that, I was courting for investors to come in to invest in the company. All right. And these investors, they are from Japan. They are listed on Nikkei Stock Exchange, and they came in wanting to buy up to 20% of the company. So working with Japanese investors is very different. They're very meticulous and spot on. So I was dealing with this guy. He was actually from a VC firm that joined this company. All right. So his task was actually to go around Southeast Asia and find good companies to invest in for their market expansion. So what I did was actually I was working very closely with him in terms of the strategies and direction that we put on, financial numbers, well-being, and every single number that we put in, he has to justify. All right, so why and so forth, but obviously because my experience dealing with VC came in, dealing with VCs, has been there. So my job gets easy. I can understand why he was. Now, the fact now is that very, very important. Everything is driven by sales, because to do the turnaround, you need to do sales, better sales, and so forth, right? So each time when he come and visit me in the office, the first stop, he will come to my office to visit me in the sales team. So he will come to my office, and then he will say, Ken, let's look at the sales number board. What are you guys doing? What have you been doing? Have you been, are you meeting your sales targets and so forth? All right. So I think that is actually what Jin is trying to say, is that, look, whatever you commit, you deliver, and the process gets easier. So I promise it, no, the team promised him this X number of figure, which I actually need to drive the sales number. So with that is said, every time he sees it, he comes in, he gets excited because the numbers are very consistent, and some of the numbers actually surpass what we actually targeted. So that guy was really, really happy. And when he reported back to the HQ in Japan, they were very happy. And obviously, to close the deal, it got much more easier. And for us to close the deal, and when doing the due diligence, it was a breeze, all right. Henceforth, we managed to get a foreign investor into the learning institution on it. Although, for it on it. So yeah, that was the crux of it. Like at the end of the day, convince investor, you need to be really spot on, deliver your numbers, deliver what you promise. I think makes your job easier. Second thing is that be always like the Brits, under promise, over deliver. Don't do it the other way around.
Promise, over deliver.
Yeah, under promise and over deliver. The Brits likes to do it, but then this is something that happened in 2009 in the Euro crisis that came. I took my startup company to do fundraising because we wanted to build a manufacturing plant. So we have got a very, very good business model and so forth, and we decided to go to UK to do fundraising.
Right.
That happened before the Euro crisis of 2009. We were plotting along very well, but suddenly the crisis came. When I was in UK to do the roadshow, it wasn't a tough sell, but like what Jin mentioned just now, suddenly you got so many better deals because of this Euro crisis came that you used to be one of the top 5 candidates. Suddenly you drop down already to maybe top 30 on it, right at the packing, below at the packing order. So it goes to show that the economic situation and timing cycle, you really cannot beat one. You really cannot. Sometimes you cannot control. So if you happen to be in that level, that crisis mode level, you're in, you just have to maybe reshift your strategy in terms of your funding strategy and so forth. Yeah, it gets tougher, like it's just that the money is there, but it's just that now the criteria of funding gets tougher because they are far lesser attractive investment to be, right, to get return on it.
I can't help interrupting you there, Ken. I'm just amazed at you two, the way you explain about all the importance of traction. It seems to me like traction is very important for the VCs to actually judge our companies, for them to invest in the startups, right? But most startups haven't got that ability, to gain traction. I mean, they're probably trickling, and trying to get this, but they've got a grand idea. So how do you, how do you kind of make it realistic for the venture capitalists to actually also look at this? I would say the lower rank of startups who maybe hasn't got enough MVP and so forth. So how would you advise on that? Both you and Jinchi. Yeah?
I'll let Jin handle this.
Actually, I think I don't buy into that idea. As in, I don't buy into that explanation or that excuses. Like for example, like if you are talking about you do not have enough traction or data, right? I don't.
Did you cut off?
We lost Jin.
Yeah, we lost that. Yeah.
Oh, maybe while waiting for Jin to come back.
You explain, Ken. Yeah.
Okay, I mentioned this now. For me to invest is actually integrity, right? There's actually a second condition which I didn't tell you guys. It's intelligence, lah. All right.
Intelligence.
Yeah, intelligence. So it goes to show that whether the founders has got the intelligence to actually start moving their business. Everybody has got a wonderful idea, but knuckle down to come and do it. It's another story. And you need another different skill set. That will actually separate the good founders versus the mediocre ones, I guess. Right. Oh, Jin, you're back. I'll let you continue.
Yeah. So sorry, I think I had a disconnection there. So I was saying, right, I don't really buy into that reasoning in today's age. Why would I say that is that, gathering data is so much easier as compared to back then. Like when let's talk about ABC Junior, right? When I was trying to figure if the MVP I created have a product market fit back then, in order to survey 100 parents that are within a certain demographic, like for example, my target back then was between the age of 30 to 40, really young parents. And my request is that they are from the M40 category, at least, minimum, and certain other criteria as well. In order to gather that 100 set of data, right, I actually worked with one of my friends because she was actually running a baby product store or something like that. And I paid her about, I think, 50 ringgit for one set of data, because it was quite a long questionnaire to be viewed. I think more than 30 different sets of data that I collected at the end for each single family. So, at the end, I have about 100 set of family data, and I only spent like a couple of low thousands on it. So I think like, gathering data right now is so much easier, and that is me taking the easy way out. If let's say today you are a founder and you have, I don't even have a few thousand in my bank account, you can always do the old school way, which is like just go and talk to people. And
Right.
yeah, because I feel like a lot of people would think that in order to gather some traction, I need to do everything right. I need to have my MVP ready. I need to have product market fit. My website needs to be up. My hosting needs to be smooth. Loading time needs to be smooth. And then that is taking way too much time. I feel like you don't even have to think so far in the beginning in order to verify or validify your idea in the first place, right? You can just go and talk to people. You can talk to your friend. You can talk to your peers. You can talk to your colleague, and that is like one way to actually justify your traction, really. So I think when you mentioned that, a lot of investors want to look at traction and stuff like that, that is true. But I believe what they want to look more is the constant effort that you actually put in. And the keyword here is constant. It's not like you hop onto the idea, you try for 2 weeks, and then you are off the idea anymore. I think what they would like to see is that you put in constant effort to at least try to do something within the market that you are actually in, whether talking to customers or whether making some improvements or whether making some studies, making some research here and there. So because when you have all these different set of efforts and different set of data, then it's easier for you to talk to that particular investor again when you meet him or her the next time. Because I don't think anyone would just invest in one person right on the spot. Like you guys are meeting the first time, and I'm right away, I'm opening my chat book and writing a check to you. I don't think that is possible unless you are a seasoned entrepreneur or you are one that is have already exited multiple times. People heard of you. You sort of already have the entire ecosystem, knowing what you are capable of and stuff like that. That is different, because I think today's topic is talking about securing fundings, right? And when you're talking about securing fundings, we have to talk about different kind of founders at different stages of startups. So the explanation that I gave just now is for like really early stage founders or those that are fresh graduates themselves, right off universities, and they have nothing. Maybe some funds within their bank account, but they have no experience running something solid and stuff like that. So I think most of the time founders overcomplicate some of the stuff. Sometimes you can just use some really traditional methods and you still can get things done anyways. So you don't really have to have everything going the right way in order for you to talk about traction. That's what I believe.
Yeah, I think it's true. Well, I think maybe I'll just give a quick snapshot of, in order, what are the things that you should be thinking of looking at when you come for funding activities. Just some very bullet point, right? For example, you do your research on potential investors. Who are they? You're looking for. Obviously, you have to clearly define your goals and strategies. You have to build a strong pitch deck. Build a strong network within Blackbird, so people knows you, right? That's actually important. Again, leverage on existing network that you have, right? Also, be visible in the digital world, in your social media, whatever it may be. I think that you have to go. I think a lot of startups now has pretty cluey already going into that direction, whether you link in whatsoever, to build credibility on it. Develop a show traction and your milestones that you have achieved. I think those actually will tell you a lot about yourself. I echo Jin. We have been taught in business school a 5-year strategic plan. Wow, God knows how long 5 years gone already. All right. So I think what Ken said, look at every 4 months, but I would look at it every quarterly. Listed companies are measured in every quarterly result. Like, I like US market because it's very transparent and quarterly result just comes in and says whether you achieve or not. For example, yesterday we have Tesla's result earnings, right? And it just didn't meet a certain expectation. The share just dropped significantly after trading market. So I think those you will probably get to relate on this. Yeah. Again, be prepared for due diligence if that does happen. Last but not least, be patient. Right? You just really be patient and you got to be persistent. I think this is very important. Persistent. You got to be very persistent. If you are not persistent and not patient, you will definitely hit really, really solid wall and you will just give up on it.
Yeah. So this is like another topic, right? This is talking about the mentality of a startup founder. I think I have something to share on that as well. Actually, feeling down is the feeling is really, how to say it sucks, right? It's like your whole day you are just so fixated on it, you can't do something else. You're just wondering what went wrong. And that is also something that is a work in progress for me. I'm trying to be better at that as well, because another podcast that I heard of on BFM as well is talking about Eric from Carson when he first raised his I think angel round or seed round. He actually met 60 investors and only 2 of them invested in Carson. The first one he met and the last one he met. Just so happened it's the first one and the 60th. So I think what Ken mentioned just now, have a lot of patience. This is very important, and I think a lot of founders also have to know how to seize the opportunity. Do not actually count anyone out. Like what do I mean by that is that, for example, you feel like, okay, this person, I don't really want him as, I don't really think he have the money to invest in me because of a certain way he or she carry himself or herself, or the way he or she dresses. I feel like you don't have to have this kind of mindset first. Just talk to them as if you are sharing your startup idea from a friend to a friend. Don't have any kind of expectation first. Just share out of fun, like just share a bit of what you are doing and stuff like that. And who knows, some of them might not have the money to invest in you, but he or she might open the door for you. So I think, like what Ken mentioned, founders today, you have to know how to utilize different tools at your disposal. Social media platforms, there's so many, right? Like Twitter, LinkedIn, Facebook, Instagram, Threads, the new one, like even TikTok. Why not? I saw a lot of startup founders are actually on TikTok. They do a lot of content there. So just utilize all these different platforms and make yourself visible out there. Because I feel like visibility is one huge thing that a lot of founders they neglected. Because it's like you can have a really good startup idea and a good product, but if you are not out there, no one knows about you.
Yeah, it's true. Well, I like to look at it in a different perspective in this manner. Imagine that you are doing job hunting, right? And you say you want to go to this particular organization to work with, all right? Your dream job lah. So you was probably thinking, hey, in order for me to get placement into that particular, my dream job, my dream organization, what do I need to do? All right. There must be a lot of conditions and skill sets they require, all right, for you to meet the expectation. So if you are able to meet them, your chances of qualifying is there. Your chances are not necessarily mean you get it. right? Because you still need to compete with rest of other candidates, right? So it's the same thing as in going for funding. You are competing against a lot of other companies for the funds, all right? So think about it. What do you have that you can compete better, all right, than the other rest? So that the process of you getting the money from them will be easier. Remember the story that I related to you, that how I actually managed to secure the foreign investor funding coming into from Japanese and from Nikkei company. They're really, really super big in the automotive space. Yeah. So what do you need to do to get them to invest in you? So you got to think about it. In order for me to get money, funding, what do I need to do? Yeah, you have to look at it lah. You know, it's just like, oh, I have this wonderful idea. I'm just waiting for people to pump in money. I just present my my story, I sell my story and all these things, blah, 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 and money will flow in. I think it's rather difficult if you go along the process. So you reverse engineer a bit lah, right? Reverse engineer a bit and think of it that you are a fresh graduate. You want to go to your dream, you want to get your dream job and you want to go into that organization, and because of certain things. So you have to work towards it. So the end of the day is that there is no, I wouldn't say there's no shortcut lah. There are obviously shortcuts, but the process gets easier if you put all this thing into perspective and flow it. As you start flowing the process, yeah, and you meet them, your journey gets easier to go in there. Certainly, in terms of pecking order, you'll be right at the top rather than right at the middle or the bottom. So remember the second condition, the second condition that I look at if you're going to invest is actually intelligence. So they separate a lot of founders, the good founders, the great founders, with the mediocre one or the middle ones. You know, is that part be able to process it through, you know, thinking of what Jin says is right. You got to talk to people. Don't be shy of sharing your ideas and so forth. You know, you go in without any expectation. You're not asking for money, you're not begging for money, right? You're just sharing your wonderful idea. And so this is, you know, and I always say you go in without any expectation, and it's all right. Obviously, I can say that if that's only happened that you do not know somebody, all right. But if you're going for certain events, of course, you build the expectations in, all right. You have certain targets and so forth, all right. So if you're meeting somebody, you know, on the general, you're not trying to say that I must get funding from these people, but now you do not know them. So you go in without too much of expectation and lower down it and so forth. I think you'll be okay. All right. But what I can see is that over the last couple of months, I mean, I've not spoken to Jin for a while already. I'm very happy that the last time that I spoke to him versus now, there's a lot of things that he has built. There's a lot of soft skills, there's a lot of process, you know, thought process is done already. I think the 2 rounds of funding that he got, I actually built his credibility a lot. I think he got a lot of positive attributes built into him already more. Yeah,
I agree.
Probably
we can actually see his confidence has actually grown, you know.
Yeah. I think probably kena kick also lah, kena kick, kena bamboo already lah.
Not so much on. I think not so much on. If I can be honest with you guys, when I first received the news of the first investment coming in, I actually lost sleep for like 2 to 3 weeks. For it.
The euphoria, is it?
No. Not because of the feeling of overjoy or happy, but it's more of the feeling of worry, pressure, and stress. Because I mentioned, like, when you have someone else's money or they are putting a bet on you, I'm not sure if anyone can understand what is the concept of that. It's actually
I can relate, Jin. The moment you take people's money, wow, you cannot.
I mean, like, some people can they can sleep fine, they have no issue. It's like, okay, if I burn that money, then I burn that money, it's not my money anyways. But you know, some people can't think of it that way. So I think in that process, I did a lot of thinking and I did a lot of brainstorming as well. Like, are you really ready to take this money, and then are you ready to approach another investor to take another set of money? So that is the kind of I think the kind of journey that every founders have to go through, and every founders is different. I think Some would respond the same way I did. Some would respond some other way, and then that is totally fine. I think knowing yourself is a huge part of seeking funds as well. You have to really know what kind of founders you are, how many times you can take a hit before you feel really down, and then you just go missing for a couple of days, and then you return again. and stuff like that. I think you really have to think all this through.
It's very interesting to listen to you guys, and I'm very tempted to ask another question actually. But anyway, if you may, allow me to ask one more question. In terms of risk appetite from this venture capitalists, for example, they know they're going to get some risk investing in the new startups, right? Surely the venture capitalist has got some kind of measurement of the risk that they will carry with them when they invest into a certain company. Now, how do they judge, the risk from, just by looking at the startups, for example? How do they judge this startup? I'm going to invest in this. Is there a hunch, or do they have a standard procedure that they have to go through? Would you like to answer these questions?
Sorry.
I really got no idea, man. Like after I made the announcement of me raising money, a lot of my founders' friends actually come to me. They will ask like, hey bro, how do you do your valuation? How do you do this? How do you do that? And my answer to them is that, a lot of times, of course, when you're talking about, let's say, Series A or Series B funding, you have to talk about all this valuation, calculation method. You have to show your true P&L and then different strategy or your growth plan and stuff like that. But if you ask me, right, when it comes to pre-seed or seed round, there's actually not so much consideration into it. Of course, the nature of your startup matters. Of course, your business model matters. But most of the time, I would say 80% is more of you as the founder.
I see.
Because you don't even have, like just now, right? Someone texted me as like literally just now, like an hour ago. The guy was asking, when you raise your first round, have you reached your product market fit? The answer is no. Like how do you even reach product market fit? Like, if you go by the definition of dictionary or startup ecosystem, product market fit is reached after you reach your Series A funding, because that is the stage where you are going to scale your operations really. So when you're talking about pre-seed or seed investment, what is there to see? Probably you will have a half-baked product, which is your minimum viable product. Things might not even work. So most of the time, it's more of you as the person. So you become the sole differentiator between startup A and startup B. Let's say I'm an investor. Okay, do I put money into your startup or someone else's startup? So it's not. So in this case, it's not like putting your product against other people's startups' product. It's more like putting this founder and this founder, at least for pre-seed round or seed round, if you ask me. Yeah. I feel like an investor would be more interested to know, like, will this guy, after burning all my money, still continue on with that idea, or he will just close shop and then just balik kampung and do something else. So I feel like these are the discussions that or the thoughts that went into that certain investor's mind, rather than your revenue, rather than traction, or rather than how fast you can grow and stuff like that, if you ask me.
Okay, maybe it's like that, Roslan. Depending on the life cycle of your business or your company. Obviously, if you're the more matured you are, the more there's a lot of ways that you can actually value the company, measure the company, but if you're at a startup, I think the evaluation process is a bit different from the traditional way of valuing it, like your PE ratio, your valuation, because there are many companies that go on the startup, they go to Equidump and go and do their valuation, sky high valuation coming, the valuation doesn't make sense at the end of the day. How can what's the basis of this company? A startup have a valuation of, say, 20 million ringgit or 100 million ringgit, that is even more than a public listed company.
Yes.
You know, so it just doesn't gel, you know, because of the way that you do your forecasting. Certain set of assumptions will actually pump into your financial projection. You get this valuation, right? So for me, as a startup, depending on the life cycle of your business, of your company, if you're at early stage, there are different way of valuing it. What Jin says is probably, I echo with it. A lot of heavy weightage is actually putting on the founder and their team, whether can they deliver the milestones or not, right? So it's a bit of, it's a little bit of hunch. There's a little bit of what you call gut feel in that sense, all right, in it. But if your startup is, let's say for Jin's company, he's in education business. An education business, you know that it's going to be here forever. It has been there for umpteen years already. So it's just that, will this type of business go out of business or not? All right, it doesn't, very highly unlikely. All right, so the risk profile itself then actually lowers down. But if you're looking at something which is very high-tech driven, technology driven and all this, and then the next question we ask is, hey, your business, will it be replaced by AI or not at the end of the day? Do you have that sustainable power to actually do consistent development and improvement program or not? All right, yeah, you are good at this stage, but we are talking about technology changes every second on it. Do you have that competency to go and move it up or not? I think the risk profile is, again, depending on the stage of your company and what industry you are in. I think that itself will probably is a good start on it to talk more, you know. But by and large, it's not the only conditions. Yeah. So I think these are some of the conditions that you may want to consider to start putting some defining some boundaries of how you're going to value the company.
Yes.
End of the day.
Yeah. Interesting. Anyway, so I really enjoy learning from you guys, actually. a lot of interesting tips and a lot of interesting sharings, actually. And I'm actually impressed. I've always been impressed by Jinchi because his experience for a young man, you know, going through all these challenges and, you know, establishing himself. That's fascinating to me, actually. I'm feeling very honored to be in the same platform with you guys. I think we should look at you guys as an example for future startups, you know. And I wish you well in all your endeavors. May God be with you, and hopefully, you know, Jinchi and Ken will sponsor a lot more startups after this. Okay.
Hopefully.
Thanks, man. But
Jin, any question you want to ask or not, and anything you want to clear at this stage or not?
No, I'm just doing my best. I mean, there are better founders outside and they have better experience to share. But I think every founders must go through that journey either themselves or with someone else's help. As in you can have a lot of investors behind your back, but there are certain journeys that you must go through. Like for example, your product doesn't work and then you feel really down, or your co-founder left the team, or one of your member is not helping you out. A lot of internal issue, external issue. I feel like all these are journeys that all the founders have to go through.
Jinchi, just to ask you, are you a one-man band or you got a team behind you?
If you are talking about founding team, I'm a one-man team. But if you are talking about because like ABC Junior platform, we have programs and activities. So I do work with a lot of contract and part-time teachers. So I do have experiences, you know, working with people and have a lot of shitty problems.
What I can advise you is like that, a few things that Jin, whoever doing startup, enjoy the adventure. It's a roller coaster. You have to learn. Expect the unexpected. No prevails. Whatever can go wrong will go wrong. Okay, it's doing that. You know, I mean, we all been through that. I've been through as a startup. You know, on days that your workers didn't come and all these things, you really have to get down to the floor. And But whatever I did, my workers didn't come. I have to really drive the forklift, really have to go and literally go and drive the forklift and put the pallet up to the truck. You really got to do it, and mind you, as a startup, it's so small office, there are only 2-3 of us, and you have to go and do a lot of things, including you be the head, you to make sure the pantry is stocked up. You got to make sure that the sanitation in the office is there, you gotta make sure the toilets are clean. You got to do everything from top to bottom.
Yes.
And in the beginning, you have to be an actor or actress also. Like for example, like let me talk to my finance department, and then finance department is also you.
Wonderful part of it, exciting times.
Yeah. I mean, we are ending the topic discussion soon, but I think we can open the floor for some questions.
Yeah, sure.
Or any comments. I believe just now Raymond have something to say. I'm not sure if he still want to say it or not, because he raised his hand just now. But
yes,
but
Raymond.
feel free to unmute yourself and share anything, man.
Okay. I think it's a good section from you guys. All right. Just a little bit. I mean, because I also did my funding round myself, and currently I'm planning. I'm ongoing for my second round. Okay, so I did have a bit of a different perspective from I think some of what you guys shared. Okay, one of it is the fundamental thinking. So the relationship between us and the investor. So first off, what is the positioning first? Because for me, it's just like to me, I think I put it in a very fair way, which this is a business deal. All right. So both we are looking at taking out the most benefit out of each other. So he is expecting that I can grow my company and he can exit with X amount of money, right? And for myself, I'm thinking that I can get so-called free money, easy money from someone else to run my things or my idea, right? And in Malaysia itself, because we're talking about Southeast Asia, in Asia, I think we've been taught of, we don't use other people's money. It's different like what Western have. You leverage on other people's resources to skill your thing. In Asia, we always think of, parents always teach us, you don't use other people's thing. You do it at your own, build everything yourself and slowly grow. But in Western, it's different story. Their parents taught them, or their education system, their mindset is, you leverage on other people's resources, whatever that you don't have, you get it from someone else, and you put it together, all these things, and you build something big. I think this is very different. And to me, last time I used to, because I come from a very Chinese family as well, so I used to have that mindset that I do everything myself, from slow, from small grow, and after times that I run few business and stuff like that, and talking to a lot of people, and eventually now I join some global programs. So I see, the mindset, the fundamental thinking is very different. How we utilize the resources, because nowadays we're talking about 21st century, everything is moving very fast. Just like the thread, few weeks ago, was the best performance apps in globally, but just 1 week after, it dropped. Things change very fast. So for ourselves also, we need to adapt to the environment as well. I think how the world works, not just work within ourselves. Is we need to adapt to the world, how the world's changed, and everyone talking about we do things globally. And the other thing is risk taking. Like I mentioned just now, in terms of the relationship between us and the investor, I think these things, when we want to do funding, we need to very set ourselves very clear on what kind of relationship we want, whether it's short term or long term. What we are looking at, and the long term, what he's expecting. The investor going to follow you through until IPO, or he just want exit within certain period of time, and how you plan the roadmap and the expectation in between. So I think this is something that I would like to share with. I think it's a bit different from the culture within Malaysia itself or Southeast Asia itself. Yeah.
Interesting. So there's a cultural element there, Raymond, isn't it? There is an element of cultural difference between us and Westerners, isn't it?
Yeah. Actually, what Raymond says is very true. Like, for example, just look at Elon when he first started his first company, Zip2. He got no idea of doing a lot of stuff, man. He was basically just a coder for the product, but he didn't go ahead and sell that product himself. He basically just hired a bunch of second or third tier salesmen, and then they just bundle it together and be a sales team. There was no briefing, no nothing, but he was just out there taking risks, leveraging on different resources and getting stuff done. I think that is the different mindset between Asian entrepreneur, I would say, from really traditional education background and Western founder. I would say there's a difference of mentality there and style of doing certain things. Which style is better? I believe both have their own pros and cons. I think you have to use the best of both worlds. Learn from two different type of styles, and just basically just keep doing better.
Yeah. Okay. To me, in terms of money is money. Money is universal. All right. I think it's maybe if you look at the Western and the Eastern culture in the education system, in the ecosystem, is totally different. Henceforth, the way that we're being brought up in either particular culture, definitely the outcome will be different. All right. And as well as the support system. All right. Maybe we have been taught to be frugal, accountability, and so forth, in more towards on the Eastern culture, right? But mind you, Western culture, I think they also have that principle as well. But maybe in the ecosystem, they are more looking into it's okay to grow the business. You need funding. You go and borrow, go and leverage it, all right, rather than using their own money. Then you start to look at the social impact, the social impact. Why is that so? I mean, of course, there's another topic, that they are into this. They are more encouraging that you go and leverage on it. All right. So I think there's no right or wrong. I agree with Jean. Whatever comes out there, use the best approach and the most efficient approach to your most beneficial to your startup and all this. But at the end of the day, boils back to a few things, integrity, and you have to integrity at the end of the day. It doesn't matter which culture you're in, whether Western or Eastern culture, the integrity is something that you have to be there, that you have to deliver and pay back whatever you promise. I think it doesn't matter what culture you may be, all right? So I think that is actually important.
Yeah, exactly.
Yeah. So that's my take, Roslan, at the end of the day, right? Make the best out of it. If the opportunity dish in front of you, evaluate, take it if you see it fit. All right, man.
All right. I think that's it for today's sharing. I believe we have shared a lot of different ideas, different experiences. Even have Raymond coming up to share his own fundraising experience. All the best, Raymond, for your second round of fundraising.
Yeah, all the best, Raymond.
Yeah, and really thank you to Roslan and Ken for hosting this panel today with me.
Hey, thanks, Jane. Thanks for the opportunity. Thanks, Roslan. Great to work with you again.
It's a pleasure to be with you all. I really.
I'll catch up.
We'll see you soon.
I'll catch up with you
next week.
Yeah. Cheers, man. Thanks.
All right.
Thanks, Jane. Thanks, Raymond. Thanks, guys.